Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Today, guys, we saw a little bit different day than yesterday. We've got more red on our screen today to go through, and it really started and kick-started, even accelerated after Jerome Powell came out and gave a speech today at 12:35. He came out and said something curious. He said the stocks are fairly highly valued. So in essence, he was saying the stock market could be a cause for increase in inflation. And plus, now we're cutting rates, which also could increase inflation. Now, he said this one other time in the last year. We're going to isolate that down on the charts in the S&P 500 to show you what happened after he said something similar, which is really unusual. He normally doesn't say the stocks are causing this or that, but he's definitely implying that the S&P 500 is overbought. So let's look at where everything panned out today. We've got the Dow Jones now almost flat, down 0.06%. We've got NASDAQ down 0.94%, S&P 500 down 0.48%, U.S. oil, nice pop on U.S. oil, up 2.15%. Gold down is up 0.52%, pushing through new highs again today. Really impressive. Bitcoin still seeing some pressure, folks. We're going to check out that chart here in a little bit. But first, we're up into the S&P 500 heat map. Look at this. Now the behemoths are all turning red. Yesterday, these two companies were really pushing the way with NVIDIA and Apple. Now that's all flipped. Everything's changed just ever so slightly. It's no crash by any means, but we're just seeing selling pressure enter the markets. Microsoft down 0.9%, Meta down 1.1%, Oracle down 4.18%, Amazon down nicely 2.95%, Tesla also down 1.56%, MasterCard and Visa both down over 1.5%. So we've got some pretty big companies that are showing pressure in the stock market. Relatively flat for the rest of the smaller companies, as you see displayed out through here on the heat map. So let's jump into the S&P 500 with the SPX. And a red day, we're almost negating everything from yesterday, but not quite yet. And this doesn't really change anything as of now. For the S&P 500. Again, we've got support down here, which is going to be on the bottom portion of this parallel channel at 6,628 points. If you see here, this trend line actually connects right through that area. So this should be a decent area of support, unless, of course, we gap over that. That's always a possibility if we get something after hours. Now, of course, today we do have something after hours. We've got Micron earnings, and Micron's been a big leader in the tech industry. We're going to check that out at the end of the show to see where price action is moving after hours with those earnings being reported. But today we've got a theme going on today, folks. We've got overbought charts, and we've got topping tails. So we've got insights as to what happens when stocks put in topping tails and what happens after stocks are overbought. So let's jump back into the charts, and you'll see here scattered all throughout the show today, I've got the RSA on several charts displayed. That's the relative strength indicator that's located down here at the bottom of the screen. If you want more insight onto RSIs, watch Benjamin Poole's show in the morning. He does it every morning at 8:45, going over the RSI trade of the day, taking a deep dive into interpreting the moves here on the RSI. But in general terms, you can see this here. Whenever you're over 70 on the RSI, you're in overbought territory. It doesn't really take a genius to point that out. Obviously, we've had a beautiful run on the Qs, pushing up into this inclining trend line today. Kind of expect something like that. We're into resistance. We should chop around this area of resistance for a prolonged period of time, potentially even with a small pullback for the price to go higher, especially when we have RSI on the daily pushing up here near 70. Looking over at the SMH, also another chart, daily over 70 on the RSI. We flip over the weekly. It's not quite as high. You know, it is actually, I take that back. It's usually slightly lower. RSI on the SMH also over 70, both of which implying overbought in the near term. And again, doesn't take a rocket scientist to notice that. We see the SMH is up from September 2nd, nicely up over 13%, nearly 14% at the close today. If SMH continues pushing higher, we do have the next resistance up here at this inclining trend line at $328.41. Here's the first support, though. Say we start having some selling simply because we're overbought on both time frames, the weekly and the daily. First support's 313.67. That's more of an aggressive level. I likely am not a buyer there since we have moved into this parallel and then confirmed with a continuation move higher. The better area of support is going to be along the bottom end of this parallel channel. It's going to be roughly a 306 and 49 cents. Next up, the IWM. IWM didn't really do too much today, except for it made new all-time highs, is not closing at new all-time highs, but still nonetheless, nice pierce above the all-time highs. And also notice what it tagged, this inclining trend line. So now that makes 1, 2, 3 official tags of that trend line. Typically on this third hit, we should see some sort of pullback. If we do, the bottom portion of this parallel will be the ideal range of support, roughly around $234.89. Also notice down here, the RSI, not quite at 70, but hovering up here in this higher range for quite a while. And notice also, we didn't have as steep of a move on the IWN. It's been more of a gradual move up. Nonetheless, at all-time highs. Beautiful move there on the IWM. Now, a new index we've got here on the chart. You see this. We've got the daily time frame displayed of the Dow Jones. I normally don't analyze this on the daily simply because the Dow Jones is a collection of a smaller group of stocks. And I generally like to look at a broader spectrum to see what's going on in the markets. However, notice what's going on here on the Dow Jones. Yes, we're at all-time highs, previous all-time highs over here at 45,073 points. But notice what's forming here at the top of the chart, which is very bearish in signals. We've got a daily topping tail up here at the top part of the Dow Jones Industrial Average. Also, we've got this inclining wedge. With these inclining wedges, we run out of space just like what's happening right now, and we're going to run out of time for price to eventually break out or break lower. But now we've got a topping tail at the end of a wedge. That's all telling me price is going to be breaking to the downside, at least for the near term on the Dow Jones Industrial Average. Be watching for that moving into the month of October as this wedge does end right there at October. Next up, Bitcoin. Now, Bitcoin, as I discussed yesterday, guys, is a leading indicator for the rest of the markets. This is a risk-on asset. Now, yes, a lot of people have invested in this for other reasons. They're developing it, holding it, like MicroStrategies, just buying, borrowing money, buying more Bitcoin, etc. So there's different players involved in this, but current chart, this is telling us we've got a breakdown. We did have a confirmed inverse head and shoulders with a target up here of 119,391. Obviously, we haven't gotten there. Instead, we've now broken down underneath this neckline, which is this declining trend line that you see here on the chart with a value at $113,046. With price now breaking underneath that as we've closed yesterday at 8 o'clock. Notice price today attempted to get back above, got rejected here at this trend line, currently trading at $111,000, just under $112,000. So a couple things. If you're a bull on Bitcoin, you want to see price remain above these low pivots. This low pivot area, if you recall, that's the head for what could be a much larger inverse head and shoulders pattern. You want to see price catch support right here amongst this consolidation, right around 111,000, all the way down to 110,000. Right in that range, you want to see Bitcoin catch support. If it does not, if it breaks down underneath this inverse head portion of the inverse head and shoulders, we're going to be coming right back down here to this declining trend line where price tagged earlier, just a few weeks ago. We're going to be looking roughly on that trend line, $106,468. So really important to follow Bitcoin over the coming days. Where do we take price action? Does it break this head? Do we fight to get back above the neckline? Curious state right now for Bitcoin. Next up, we've got gold. As I said, new all-time highs on gold, folks. Incredible move up, but look down again at the bottom of the screen, overbought scenario. What happens in overbought scenarios? We generally sell off. We could still push higher, but then we generally sell off following that up. As noticed, just not that far away here on the chart. So we're in an overbought situation that should imply further downside support here at 35.56 as displayed on the chart. Upside resistance, should gold continue to push, I mean, we're looking, as I've said yesterday, folks, right around $4,000. And this could take several days to get up there, but it is a possibility. It's clearly defined there on the charts too for you to see from a pivot back here. And we'll rewind the clock just a tad, pivot all the way back from April of 2024, connected over to the pivot in April of 25. Curious, folks, 1 year long trend line connecting itself. Will we reach back up here before April of next year? And if we do, man, that's far out, folks. That's all the way over here. We could be talking around $4,500 if we do have that similar pattern with 1 year spread out from tagging the trend line here and then another year. That would then equate to gold up at 45. Curious to even imagine that high price per ounce. An ounce is really nothing. You can blow that off the desk. It's really, really crazy. All right, next up, we've got silver. Check this out here, folks. So we've got silver that has pushed up, tagged the next resistance, actually pierced it today that I've been talking about. It's been really neat. We've been watching this again, step by step by step, all the way from the breakout back here in April that occurred. It was just up, up, and away on the chart of silver, and we did tag that 44.26. In the near term, though, we're getting overbought on silver. We should be having some consolidation or pullback period. First support is the previous resistance at 41.66, followed by $40.60. Either of those areas in that range would be a good area for a first entry on a pullback on silver. Next up, U.S. oil had about a nice bounce today, but still trading in this range, folks. So it's still hanging out in the lower range, creating this bearish consolidation. Now, notice, though, we've got this declining yellow trend line that the longer we stay down here, price action on this trend line is getting closer and closer and closer. Now, a way for U.S. oil to break out of this bearish trend would be to get above this trend line. So at least that is starting to enclose on U.S. oil too. So we would and should be having a breaking point soon. Oil is obviously being very sticky right here on this declining trend line. Next up, nat gas. Nat gas had a nice bounce up, not quite as much as I was hoping to state that we were consolidating along this declining trend line. For now, it's just simply a rejection from this inclining trend line that you see here on the charts. Couple different patterns and compartments, if you will, here on nat gas. Next area for it to beat, to head right back up, will be $3.20. This area will be a slight speed bump, but then the main test is going to be right here on this inclining trend line, roughly at $3.35. And as that is tagged twice in the most recent history, it could be vulnerable for a break up should we get momentum going back up for nat gas. Again, this is a commodity that generally starts picking up interest once the northern hemisphere starts encroaching on those winter months. Next up, we've got Affirm. Now, we talked about RSI overbought scenarios. Now, we've also got topping tails on some charts like the Dow Jones. Look at what happens when we've got a topping tail here on this chart of Affirm, AFRM. Now, AFRM, this is curious too, folks. So obviously, if you don't know anything about this company is buy now, pay later. In essence, it's a form of credit provided to you and anybody else that wants to make large purchases on this, or even small purchases, such as maybe even going to the grocery store. Affirm's an option to pay. Now, something to consider with Affirm, it's got a daily topping tail. And then on top of that, we most recently pushed through numbers for individuals holding over 90 days of credit card debt, delinquency. Folks that are in delinquency over 90 days, we finally reached the same percentage of folks that were delinquent back before the housing crisis and the great financial crisis of 2007 and 2008. So we just reached that number where people are putting off payments that they need to make on these credit cards, and Affirm's all the way up here with a daily topping tail. Affirm's going to be one of those companies that is hurt hard whenever people can't pay off their bills and they go delinquent. Obviously, that's the whole nature of their business. We'll see where chart patterns take us, but we can see right now price action is starting to break this inclining trend line. Thus, this trend is starting to break. We'll see if we have a continuation move tomorrow with support down here at 73.60. This is a better area of support down here at 62.96, as that will have good distance away from what would have been, its most recent pivot high. But interesting how this is starting to break, all the while with Jerome Powell saying the markets are too high and credit card delinquencies reaching new same peaks that they did in 2007 and 2008. All of these little pieces of the puzzle are starting to come together to paint a picture that's not quite as rosy in the near term for the economy. Next up, we've got Reddit, RDDT on the daily time frame. Another topping tail here at the chart. So far, this has been a bull trap scenario with price breaking out above an inclining parallel channel as displayed here on the chart. You can see this parallel goes all the way back to August of 2024, and price action so far has been contained within most of this range, except for these few trading days, which then price has gotten rejected. Topping tail coming back in after failing with this bull flag formation. Big reversal move in the opposite direction, now catching support right here in this 235 range. Next area of support for Reddit is going to be down here at 210, followed by the inclining portion of this 50% area of the parallel, right around $183.94. Next up, we've got Symbotic. Now, this company is a little bit different. We are a little bit overbought. We're here at 55.87, just recently touched up into 70. If you flip to the weekly, right up there too, right around the 64.63. However, if I flip on the simple moving averages, look here on the weekly, how the 20 moving average, this yellow line trailing this inclining trend line, and the 50 and the 200 are starting to space out, implying that all of this chop action is actually building momentum for a potential break higher. Now, Symbotic's involved with robotics, so this obviously is going to be something in demand in the future. But are people starting to pile into this now? And is this kickstarting a new rally? We'll see. Back to the daily chart. And you can see here we've got a closer view on what could be support. First area of support is $51.97. That's going to be the more aggressive level. A more conservative level will be the second trend line. And I'll just zoom back out so you can see where I got the first trend line here at December of last year, connected over to pivots of January of this year. And you can see how when price action came up, it stalled, came back, got bounced and supports. And then since we broke beneath, we had it as resistance. So that's an important trend line right here. We could be getting support for Symbotic to continue to push higher. If you could wait and be conservative and or spread out your entries, this would be another great place to enter at $43.80, roughly around $44. Also, just keep in mind where these simple moving averages are at that point in time when price, if it does come back down here, are these averages still spaced out? If so, that would put the probabilities in your favor for continued move higher up there on Symbotic. Next up, Amazon, one of the big companies, as we've discussed, had a decent down day. Look at this big red candle. A lot of big selling pressure here on Amazon, but support isn't really that close. It's not the furthest distance away, but we could have another equal selling day that we saw today before we get to some solid levels of support down here at 213 and 77 cents. Another level of support is going to be a little bit further down at $205.23, but interesting rollover that's occurring here on Amazon, a little bit of a distance away from support that could imply a little bit more downside in the near term. Next up, a stock that is ripping through the charts, folks. Look at this, Oklo. Now, this company is involved in nuclear power. And with the new build out of these AI data centers, a lot of people are piling on into this company, but this company is not profitable yet, folks. So it's a little puzzling how it's run so much. You can look back here from just September 5th. We're currently up 115% in just 13 trading days. Guys, that's awesome. Over 10% or right around 10% a day. All right, sign me up for those sorts of gains, but this sort of story doesn't last forever. You see, I've got a couple trend lines here. We have broken out, had two double breakouts on Oklo. First area that price is going to come back and catch support is on this the highest inclining trend line, right at $125.44. Followed by 113.57, 104.53. But ultimately, guys, I think price is coming back down here around $92 to $93 before we see a sustainable bounce up on Oklo. Nonetheless, regardless move the last few days, it's really been ripping through and off the charts, even moving up slightly after hours. Speaking of after hours, last up, Micron. As we see here, Micron pushing up here at 171.60. Closed today at 166.41. We did have resistance on this inclining trend line right at 176.79. Let me show you where that came from. And we'll see if price actually tagged it today. That's a longer term inclining trend line back from May of 2018, connected over to the pivot high that occurred here in June of 2024. And as I said, let's see, usually when I flip after hours pricing, it distorts these inclining or declining levels. So we'll be looking around 177. Let's see, just curious where price got to after hours. Didn't quite get there from what I see. Let's see, we got as high as 174. Still halfway decent push up there for Micron. At least it's not negative on the day. But if we do push up higher, even into tomorrow, this is going to be the next level of resistance, right around $177 on the daily chart there, Micron. All right, guys, that wraps up a lot of info today. Jerome Powell, again, came out, just really kind of threw us a curveball. Last time we saw or heard Jerome Powell discuss the markets being inflated, causing inflation, was in December of 2024, and that caused a lot of volatility. We saw the markets pull back 5% from there. Will that happen with us moving forward? We'll see. We got a new month coming up soon, and could be new investor sentiment at that time. Other than that, I'll be back tomorrow. More trade setups and analysis for you. Until then, thanks for tuning in. Please like and subscribe. We'll see you on the charts next time, folks. Take care.